Well, hi, it's Chris here from Capital Counts. Welcome again to one of our investment series, Meet the Fund Manager. I'm kindly joined here this morning by Josh Hall, Senior Investment Specialist with Aberdeen Standard Investments. Josh is very well placed to talk to us today about a thematic that we're talking about as being emerging markets. Deals very, very closely with the global, the Asian and multi-asset teams within his business. So I'm assuming, Josh, you are very well placed to talk to us about emerging markets. So for our audience, what are emerging markets?
Thanks, Chris. It's nice to join you here this morning, and thanks for the opportunity to come along and talk to you and your clients. Emerging markets are really those parts of the world, those countries and regions of the world that are typically growing at much faster rates than the mainstream developed markets of the world. Emerging market countries are typically most of Asia, with the exception of countries such as Japan, Hong Kong, Singapore. Large parts of Latin America, South America, parts of Eastern Europe as well, and a few countries within Africa and the Middle East as well. So the characteristics of these countries is generally they have much younger, very hard working populations, typically quite high savings rates, and their economic growth is typically higher, as I say, versus the developed markets of the world that we know and love quite well. The other part that I guess helps define an emerging market is really that their political and their legal systems are relatively advanced and robust. They're not frontier markets, so open and fluid capital markets tend to be another criteria of emerging markets.
So what are the advantages, disadvantages of emerging markets?
So the advantages really are that these countries, as I say, are growing at much faster rates economically than the rest of the world. That's what helps define these countries as being emerging markets. And therefore, all else being equal, higher rates of economic growth should lead to higher rates of return from investments within their financial markets. So these are riskier parts of the world, that needs to be also noted. But the risk-return opportunity within these markets we think is very attractive for longer-term investors.
And what about Aberdeen Standard Investments' point of difference?
Yeah, sure. I guess we have been pioneers in these markets for the best part of 3 decades. We have had teams on the ground in these markets for many, many years. So we have a competitive advantage there in the sense that we have people on the ground who understand the local nuances of these countries and regions, where local knowledge around politics, language, cultural issues, economic issues do all feed into our investment process. And therefore into our decision making around picking investments in these markets.
And just getting a little bit granular, where does Aberdeen again see some opportunities, some value, whether it's via country or via sector, or what opportunities do you see there?
Yeah, sure. Most of the investment work we do is bottom-up stock analysis. So we don't take a very strong macro top-down view. We tend to focus on the individual appeal of individual companies, and that's where most of our analysis is done. But at a more, I guess, holistic or macro level, we do think there's a broad opportunity set within China. China's certainly a very rapidly expanding economy. Economic growth has slowed in China over the last decade from very, very lofty levels to more moderate levels, around 6 to 7%. But also India, we also see as a fantastic opportunity the next decade or two. So those two countries are our two largest country weights within the fund. Together making up about 35–40% of the fund's exposure.
Great, and just look, clients generally will ask us about performance and outlook for particular sectors. Have you got a 12-month view? If your crystal ball, what do you think's going on?
I'll just dust off my crystal ball, Chris, and tell you exactly what's going to happen. But no, it's a little bit difficult to forecast markets in the short term. We're long-term investors. We're looking to pick investments in companies on at least a 3 to 5 year basis. Sentiment tends to drive share prices the shorter term you look. We are long-term investors. We're looking to grow wealth for our clients over that medium to long term. Emerging markets have performed really well the last couple of years in particular. Our investment style is a little bit more defensive and conservative versus the broader market. So even though our absolute performance has been relatively strong over the last couple of years, we've slightly underperformed the very strong returns of the broader market. Looking forward, the outlook for EM, or emerging markets, is still relatively strong. As I say, the underlying organic or economic growth in these parts of the world are very, very strong. Economic growth is probably 2 to 3 times higher in the EM world versus developed markets as a whole. The underlying earnings within the stock markets of these countries are still very, very strong. There are always some concerns, there are always some risks on the horizon. I guess the most prominent one right now is the risk of a global trade war. Post President Trump's election a couple of years ago, that's been a very clear part of his rhetoric, is to have a more protectionist policy, which could impact global trade, developed market and emerging. We tend to think that's slightly overdone, and the impact on EM is likely to be less than what perhaps some of the perceptions out there right now would suggest. Most of the economic growth that's going on within EM is internally driven. It's the burgeoning middle class in places like China and other parts of Asia, which is really the main driver of economic growth and therefore earnings growth within most parts of the EM world.
Great. Look, I really appreciate your time this morning, Josh. That concludes our interview with Aberdeen Standard Investments. Really enjoyed that. I hope you enjoyed that listening here today. But please, if you've got any questions at all with regards emerging markets or your portfolio, or for that matter would just like a review, please give us a call, 1800 882 166, and look forward to seeing you next time. Thank you very much, Josh.
Thank you.
Cheers.